behind this? It's Rava, isn't it?
Rava.
You want her. No, she's a little too cheery for me.
Won nothing else, to be sure, but did manage to put some teeth into the noble, high-finance sport of professional brawling. In a sometimes rougher arena, the Chicago Bulls three-peat award goes to that cute little financial number, the Dow Jones Industrial Average, which for the first time in its 101-year history racked up a third straight year of greater than 20% gains. That wailing and harumphing you hear from the cheap seats comes from all those so-called market historians who kept telling us that anybody with any sense knew it could never happen. The Don't Listen to What I Say, Just Watch What I Do award was won in a walk by Federal Reserve Chairman Alan Greenspan, who varied melodramatically between extravagantly negative and extravagantly rosy appraisals of the financial scene. But in real life, except for one minor quarter-point blip in March, sensibly left short-term interest rates entirely unchanged. His commendable inaction should set a standard for government officials everywhere. The How Long Has This Been Going On award is presented to all those smart individual investors who have been coming into the market in increasing numbers year after year and who have had the wisdom to stay there while their haughty institutional counterparts raced counterproductively in and out. And speaking of prospective new investors, our Instant Investment Club award for 1997 goes to the McCoy septuplets. So far, they represent a major investment in diapers and pablum, but you never know. And speaking of strange desires, our All I Want Is Another You award was won hoofs down by Dolly the sheep. Theologians may fret, but Dolly and her owners seem to find cloning sheer delight. While we're on the subject of woolly thinkers, let's give the Oh Grow Up award to all the perennially wrong pessimists who, when the market briefly took a hit in late October, sprinted for the television studios and news magazine offices to explain, with, as it turned out, entirely predictable inaccuracy, how the end of the financial world was now finally at hand. You betcha. Not that everything was always for the best in the best of all possible worlds. The markets are still looking for a vaccine against Asian flu. Many of the same hysterics who were having heart failure about inflation a few months ago are now getting the vapors over deflation. And the historic U.S. financial boom, powered by victory in the Cold War, tame inflation, and major industrial restructuring, has not yet spread to every segment of American society. And so the Is That All There Is award gets handed to all the crowd in Washington who kept trying to explain why the economy they boasted was the absolute unqualified best in generations had somehow failed to bring median family income back even to the level it attained in 1989, when a guy named Ronald Reagan was leaving the White House and taxes were a heck of a lot lower. Don't tell the children they couldn't handle it. And besides, they're too busy making policy. We tonight will talk with four of our panelists whose stock selections for 1997 walloped every average in sight, and find out where these proven winners think the biggest money will be made in 1998. But first, let's see how Wall Street rang out the old and rang in the new. Santa Claus came a little late this season, but the Dow Jones Industrial Average finally pulled out of a three-week slump to end 1997 and begin 1998 on a high note, up more than 285 points for the week to close at 7965.04. And the broader markets turned in an even stronger performance, with both the S&P 500 and NASDAQ recording their best week in 8 months. All of which convinced our elves that they are on the right track. Their consensus of a very bullish +5 for the next 3 months has held steady for 8 weeks now. 3 months ago, neutral was the correct vote, and halos marked the 5 who got it right. Doubts about Asia and other foreign ports continued to be good for both the U.S. dollar and U.S. bonds, while the 1997 Broken Record Award went to the ever-hopeful gold bugs. whose once precious metal tarnished below $290 an ounce. And if you're sometimes of two minds yourself about the ever volatile economic and financial scene, be aware that such vacillation can be even costlier than you thought. A Wisconsin psychiatrist charged a patient with multiple personalities $320,000, claiming that each time the two met, it was really group therapy. Will the patient who is suing have to pay? Yes and no. Laszlo Barini, how does the state of the market look to you at the start of '98?
Very strong. I'm reminded of other periods, especially the end of 1994. A lot of skepticism. Our work is positive, and I think the market's going to surprise us yet again.
People are too gloomy once again. They're too quick to jump to pessimism. What's your view, Ralph Hockenport?
Well, I think the first half is going to be very exciting, but I kind of disagree. I think the sentiment out there is just too much optimism. And I think this is the year to contrarian, so you'll find out in a few minutes that I think the second half of the year is going to be difficult.
You can tell me right now. You think the second half of the year is going to be difficult?
Yes, I think we're going to have a bear market in the second half.
I don't like to tease the news. Julius Westheimer, how do you assess where we are now?
I think the big money has been made. When you look back, the market has doubled in 3 years. No special selection without even getting out of bed. So I think stocks may move sideways while earnings catch up with some lofty stock prices.
I think volatility is going to be the key in this new year, with the market making new highs and then frightening us in between, going down and closing out the year not too different from where it is now. And volatility perhaps more important than the classic interest rate inflation ideas.
Before we leave this discussion, I've got to get back to these first two, since they disagreed on a very central point, which is whether there's too much pessimism. Where do you see too much pessimism, briefly, Laszlo?
I say from the Wall Street analysts and strategists.
Where do you see too much optimism?
In the latest publication in Business Week had 44 strategists, and they think the market's going to end higher than where it is today. And I disagree with that.
We can make a market between you two and not bring in anybody else. Now, before we look ahead with our quartet of financial champions, let's review where we've been in another vintage year for investors. Confounding the ever over-publicized bears once again, the Dow Jones Industrial Average set 39 records in 1997 en route to its 7th straight winning year, and its 14th in the past 16. All the broader indexes also posted healthy gains, with the S&P 500 leading the way. Gold continued its 18-year pause, trading at levels not seen since 1979. But silver perked up with a late-year rally that sent its value to a 9-year high. The dollar had a powerful year that was great for U.S. tourists, if a bit worrisome for some U.S. exporters. The greenback gained against all other major currencies, especially the vaunted Japanese yen and the traditionally strong German mark. Meanwhile, the U.S. economy continued, as it has now for nearly 7 years, in an extended, though still distinctly subpar, recovery. The pace picked up last winter, then began to trail off again, with many predicting even slower growth in gross domestic product in 1998. Helping sustain the recovery and give the economy high marks for durability, inflation was viewed increasingly as yesterday's news. At year-end, there was considerably more talk about possible deflation than about rising prices. For the 12 months ending in November, consumer prices rose just 1.8%, the lowest in nearly 11 years. Happily, the old academic theory that subdued inflation means high unemployment was discredited once again. The jobless rate continued on its long march down through most of 1997 and was at a 24-year low, 4.6% in November. It was a good year for the bond market, too. The benchmark 30-year Treasury bond gained 17% in 1997, driving the yields on those bonds below 6% to their lowest levels in more than 4 years. The yield curve flattened significantly in 1997 as short-term rates rose while long-term rates fell. The average yield on taxable money market funds ended 1997 at 5.10%, a quarter point higher than a year ago. 12 months ago, the price of oil had moved up sharply to just under $26 a barrel. But in disinflationary 1997, the oil price dropped even faster than it had risen in 1996. While America's budget deficit came down dramatically last year, and the first surplus since 1969 is now a distinct possibility, the trade deficit has gone in the opposite direction. Through the first 10 months of 1997, the gap between U.S. imports and U.S. exports was nearly $166 billion, on track to set a record. There hasn't been even a monthly surplus in our trade balance since 1976. In 1996, the private organization known as the Conference Board took over from the government's Commerce Department the job of keeping the monthly index of so-called leading economic indicators, which in fact had often been misleading. For example, in incorrectly forecasting an outright recession in 1995. This year's numbers suggest the continuance of frustratingly slow economic growth in 1998. Laszlo Barini, which of these numbers, if any, is the one to watch for the 1998 markets?
I think inflation, because everyone's agreed that we're not going to have much inflation. There's some questions about the strength of the economy, and so any surprises, I think, would come from inflation, and that would be the one I would watch most closely.
What do you expect, incidentally?
I expect it to continue to be low, as it's been trending to 2.5%.
Adds to your generally bullish posture.
Yes, sir.
Ralph?
Well, I agree with Laszlo. I also am concerned about interest rates. I think interest rates will go lower, but maybe because of the economic environment. Maybe there is a scare of deflation. If that happens, then we have to worry about earnings, and that impacts the earnings of multinational companies.
Deflation would mean prices not just rising slowly, but actually falling.
Falling down, yes.
Do you anticipate that spreading from Asia to the U.S.?
Yes. In fact, I don't think the market has totally discounted that yet. I think we've been too easy to fluff it off and say it's a non-event.
You're still listed as bullish among our elves, which is probably why you are going to tell us that you expect the fall to come later in the year.
Exactly.
Right? Joyce Westheimer, what are you looking for?
I think one of the most important things we have seen and should keep an eye on is the level of interest rates. Because as they came down this year, people became discouraged with treasury bills and CDs and things like that, which have no inflation protection built into them all at all, and they put that money into stocks. As a matter of fact, the baby boomers particularly are keeping their money there. You don't hear the term profit taking anymore.
Bob Stovall?
I think that profits will be relatively more important this new year than they've been for a long time. Classically, we watch inflationary expectation and interest rates, but I think that many U.S. companies, most of them, and foreigners too, don't have the pricing power that we had before these slowdowns and near failures around the world. So I think that costs will rise, and pricing flexibility will be reduced, and earnings surprises, disappointments will produce this volatility I referred to.
Slower growth in profits, but still growth?
Growth, but spotty, and negative surprises coming where you don't expect it sometimes.
All right, now comes the moment of truth when we turn the spotlight on what these folks said 12 months ago. Laszlo Barini, it begins to look as if we are going to have to reserve a permanent place for you on this annual New Year's program. In the toughest competition in all investing, picking a list of specific investments that can't be changed for any reason for the next 12 months, you have now earned your 5th appearance in 6 years. Your Dow predictions were all in the ballpark, with your forecasted low of 64.50 missing by just 59 points. Only Maceo Sloan, who will be here next week, was closer on that one. But where you really have excelled is in the stock picking category. According to calculations made for us by our friends at Bloomberg Financial Markets, your list was up just under 75% last year, with 3 of your selections more than doubling. So continue to wave that magic wand. Ralph Acampora, you're the Dow champ for 1997. Your predicted high of 82.50 was only 9 points away from the actual high. That was the closest of any of the panelists' predictions, not surprisingly. And you were similarly a winner with your closing prediction of 8,000. Only a little too much pessimism on your low prediction kept you from a triple crystal ball sweep of the Dow. And the better than 39% average gain in your list of 6 stocks wasn't exactly chopped liver either. Maybe something to this charting after all.
I hope so.
Julius Westheimer, you may be in your 9th decade, but your financial speed hasn't slowed up by even a step. While your Dow predictions were predictably gloomy, what else is new? You missed the year's high, for example, by a trifling 1,400 points. You still know how to pick them, giving us a list that showed a sparkling average return of nearly 38%. We hope you'll continue to earn a place each New Year's for at least another 81 years.
Thank you.
Bob Stovall, you were among the top 4 predictors of the Dow's high and close in '97, though like nearly all the panelists, you consistently erred on the low side. And more important, your investment list made money to the lively tune of 36.5% for those who trusted in your impressive experience. Welcome back. But enough with the compliments, however well earned. What have these guys done for us lately? For starters, in our annual triumph of hope over experience, let's have from each of you the true inside word on the highest close, the lowest close, and the final close for the Dow Jones Industrial Average in 1998. And this time, gang, please, let's get it exactly right for a change. Laszlo?
High of 10,250, a low of 7,800, and a close of 9,750.
We're not going to get to that 10,000?
I think we are.
What's the high?
10,250.
10,250. I see. Do you have the date and the hour on that one? Ralph?
My high is 8,600, my low is 6,000, and my close is 7,300.
And from what you've told us earlier, I presume in that order.
Yes.
Okay. Julius?
My highest close is 85.45. My lowest is 68.35. And I think the Dow will close the year at 83.45.
An exciting year, but a positive close.
Yes.
Bob?
A frustratingly tight range here, Louis. A high 89.72, 74.72 on the low, and a close not too much different from now, 79.72.
The trading range market, which will have to be highly selective.
Yes, indeed.
Okay, well, one thing is for sure, and this is my only personal unqualified guarantee of the night, at least some of them will be wrong. But if you'd like to see the full predictions with specific stock selections from all 26 of our panelists, including those not here tonight, on where to invest in 1998, all these lists will be included in tonight's transcript. If that sounds good to you, you can get that special New Year's transcript for $6 by writing to Year-End Transcripts, Wall Street Week with Louis Rukeyser, Owings Mills, Maryland 21117. That's Year-End Transcripts, Wall Street Week with Louis Rukeyser, Owings Mills, Maryland 21117. And now let's see what these fabulous 4 think are the very best buys for 1998. Laszlo?
Lou, we're going to start off with 3 warrants, which are in effect long-term options. The first one is America West Airlines. The second one is Credit Suisse, the March 99 warrants. And then third, the Roche Holding warrants of January 1999. Stocks that we want to own next year are Apple Computer, Bangkok Bank, the B shares of Berkshire Hathaway, the B shares of Continental Airlines, Corning Glass, Mellon Bank, Nike, Pfizer, and Philip Morris.
Is there any consistency to that other than they think they'll all go up?
There's some consistency. These are stocks that really under, a lot of these stocks are under accumulation. And even though they may not have bottomed in price, we're seeing money going into them.
Accumulation means that smart money is supposed to be buying them?
That's exactly right.
How do you define smart money?
Smart money is people who are buying on the depths. And unfortunately for me, Apple Computer, one of my stocks was up 3 points today.
Sorry about that. Great distress, I'm sure. Ralph?
Lou, I'm going to take advantage of the second half of the year and my concern for the market in the second half of the year. So I'll have one theme in common. My 5 picks are actually short sales, meaning I think they will be lower this time next year. First one would be Nike, NKE is the symbol, Philips Electronics, PHG, Tidewater Inc., TDW, Thiokol Corp., TKC, and Barnes Group, B is the symbol.
Incidentally, you gained a lot of attention the last couple of years by being super bullish. When do you think we're going to get to 10,000?
Well, I had originally thought we'd get it by June of 1998. It's still possible, but I think we have too much optimism. By the time we get to my target of 8,600, I'll probably be less excited about the market.
There's a lot less optimism since you started speaking.
Yes.
Westy?
I like the financial area stocks, and I also like the media stocks for the coming year, the explosion in the media. My selections are AT&T, Bank of Boston, Loral Space Communications, CBS, Wells Fargo, Time Warner, U.S. West Media Group, Coca-Cola Enterprises, Federal Home Loan Mortgage, Schlumberger, Health Management Associates, and the Travelers Group.
Why this terrific enthusiasm for media?
I think we're just in an era where the whole media empire is exploding. More desire for communications, different techniques in communications, and these seem to be gathering an additional share of the market.
And since you told us to keep our eye on interest rates, what's your forecast there?
I think interest rates will stay about the same. I think Federal Reserve Chief Greenspan has done a remarkable job of keeping inflation and interest rates low, and I don't think we'll see much fluctuation.
Bob Stovall, what's your list?
I have a theme that produces income in case we do have a frustratingly flat market. Starting off with 5 convertible preferreds, all with high yields. Chiquita Brands, Amex Gold, Corning, Cablevision, and Inco. And then some commons that are, I hope, in the bottoming phase. Oxford Health Plans, Greyhound Lines, a small bank. There are a lot of them around that might be taken over. This is United Bank Corp of New Jersey. Eastman Kodak, the worst dog in the Dow the last 12 months. Schroeder Asian Growth Fund, which is going to go from being closed end to open end soon. Sensormatic, and Capstead Mortgage.
Bob, you're a reputable market historian, a very small group. 4 straight up years, is there any precedent for it?
We've never had anything nearly like it. And actually, the last time I heard about hollow squares or 4 things back to back, it was the defensive posture taken by the Brits in their fight against the colonials all around the world. So maybe it means that we do have 4 up years. The 4th year will be a small gain, and it'll be a year to be somewhat defensive.
And finally, how do you assess this dispute over whether there's too much optimism or too much pessimism?
I think that you're right. I think you said that it's the institutions that are pessimists and the highly paid strategists who haven't been right for some time, and the flow of money constantly into equities from the States and also now from around the world is helping put the market up.
And there we do have to stop. I want to thank our panelists for once again proving that they are not just among the sharpest minds in finance, but indisputably the world's best sports. And I hope you'll be back with us again next week when we'll get the new year off to a rousing start with a talk with the most influential woman in the world of money, Abby Joseph Cohn, who got it impressively right for us again in 1997. Meanwhile, this has been Wall Street Week. I'm Louis Rukeyser, wishing you everything you deserve in 1998, plus 20%.